What is up, you guys? Peter Carlo here, and today we're going to be talking about Roblox. This is a company that I did a very deep dive on, a very intense deep dive about 6 or 7 months ago. But since then, the valuation has been cut more than in half. And in this video, I want to go over if I would be buying Roblox. If not, what price would I be buying Roblox? And ultimately, if I just think it's a good investment going into 2023. If you guys haven't already, hit the like button, subscribe, comment what tickers you want me to do a deep dive on. It definitely helps because at the end of the day, this content is really just for you guys. Make sure you check out our Discord community. The link is in the description. We are a trading community and investing community of over 10,000 members. And our goal in 2023 is to become the biggest and best free trading and investing community. You guys will get access to free courses on investing, free trades, as well as tons of other free content. It's all over there. The link is in the description. Now, I want to talk about Roblox, and this video will be a lot less on how the company makes money and a lot more on current valuation, but we will do a quick overview for those of you who do not know what Roblox is. Roblox corporate overview: their mission is to build a human co-experience platform that enables billions of users to come play, learn, communicate, explore, and expand their friendships. Roblox is powered by a global community of millions of developers who produce their own immersive multiplayer experience using the Roblox Studio. Roblox is ranked as one of the top online entertainment platforms for audiences under the age of 18 based on average monthly visits and time spent. The popularity is driven purely by their community and users and developers. Learn more about the founding story, etc., etc. So for those of you who do not know what Roblox is, it's basically a game. I don't want to say just a game. It's a gaming community and a gaming platform. And I've never actually played it myself, but one of my favorite things that I love about a company like this or about a program like this is that they do not actually create all of the content themselves. They build a platform and then they allow other influencers and other builders, other players to build their own worlds and build their own characters, and then they're able to sell them. And what's really cool about Roblox is it's one of my favorite types of companies, like an Airbnb or an Uber, where they don't actually create the product. They just house all of this together under intellectual property. And it's phenomenal because they can come and help their community, help their developers, and the developers can basically do everything for them. The community can do everything for them, which is phenomenal. I love that because it's not only is it ever expanding, like they can just continue to change things and update the game in perpetuity, but it's also cool because they don't just have developers who are just like creating game content alone, which is really cool. Now, looking at the performance of this company, so within the last month, they're down 34%. Within the past year to date, they are down 68%. And then I don't know if this is right. Max is saying it's down 91%. I don't think that that is right. Sometimes everything money is a little weird, but yeah, I mean, they didn't IPO at 140. They actually IPO'd up here at about $61. So they are down about 50% all time, but I don't know why they have their IPO price up at 300. But overall, definitely has taken a hit since its IPO. Now, market cap is 17 billion, which is a lot, right? It's not massive, but it is sizable. I mean, like they've even said here, daily active users is at 58 million a day. That is huge. That's really, really huge. So it's definitely not like a small little game. Revenue is 2.2 billion, and net income, which is not good off of that 2.2 billion, is a loss of $777 million. So obviously the company is not profitable. PE doesn't matter. 5-year PE doesn't matter. 5-year profit margins don't matter. Price to sales ratio is 8. And obviously, since they're not profitable, there's no dividends. Now, the biggest thing for this company, as you're going to see, is just going to be growth and revenue. So in 2020, they did 761 million in revenue, which is very good. And then for revenue in 2021, they did 1.66 billion, so over doubling their revenue. And then from 1.66 billion so far in 2022, we're at 2.21 billion. So phenomenal growth. Gross profits have grown as well, which is just a really good sign. Now, with that, let's just take a look at the balance sheet, and you can see, actually, let's go back. I'm going to look at net really quick. So net income, you can see this is something to notice. So doubled the amount of their revenue in 2020 and 2021. But something to note is they also did double their amount of losses. So their net income actually doubled to a loss of 407 million. Once again, they've done really well in 2022 so far with growth, but they are actually growing with their net income. So what you really want to see is not a linear movement, unless you're in the positive. If you're in the negative and you're growing rapidly, which is phenomenal with their sales and their revenue, what you preferably want to see is that their losses to dwindle, because they want to be making more money on that revenue, or at least making some money. So what I really want to see is that this year their revenue is better, but they're also keeping more money, that their net profits, instead of being a loss of 400 million, would be like a loss of 200 million. That would be a really good sign. And so that's something that I would like to see. But, with that type of growth, you are going to burn cash. That's just going to be a part of it. Now, taking a look as well, like I said, 5-year PE, none of that is going to matter too much. But we are going to look at the stock analyzer tool. And I am going to be completely honest, it is very hard to give a company like this a valuation. Number one, I find it pretty hard just to give valuations when a company's burning money or just losing money in general. I don't like to invest in companies that are losing money. I'm not saying that there's not money to be made. I have invested in companies that burn cash, like Neo. I was investing in Tesla before it was profitable back in like 2017. I have invested in companies that were not profitable, but it's just very hard when the company is this young, the company's not profitable, and I'm really just kind of throwing shit at the wall and some arbitrary numbers here. But the reason I'm still doing this is because, in my opinion, if I can come up with some very, very conservative numbers for this company to hit for the next 10 years, and it meets the criteria, and then eventually maybe in 2023 we start to see this climb down to those numbers, we can put this in our back pocket and then come back 6 months from now and say, all right, maybe we're starting to get close to the numbers that we want to invest in. So let's take a look. Revenue growth, 33% over the past year. As a company scales, they cannot continue to grow revenue at that type of an insane pace. I'm not saying the Roblox is going to grow to the size of something like Apple, but the thing that you have to understand is that a company like Apple, with their magnitude and size, like, they're happy just to maybe make a 2% revenue growth per year. Now, this company's done 33.4% in the past year. I'm not expecting that to happen over the next 10 years. So what I would realistically look at is see if the company can do revenue growth of 15% per year. Now, let's say low end would be, I'd say low end would be like 8%. And then let's just say like 15% mid. And then high percent would be, let's say 25. I think that that's pretty solid. Let's take a look at profit margins. Obviously, they're not making money. 35%, negative 35% profit margins. So let's say the company can do 2% profit margins, right? Just get profitable. On the mid size, let's say that they can do on average a 6%, and then let's say they can actually on the high end do 12%. Free cash flow, I usually like to use that same number, and so we can see here as well, 12. PE, not applicable because right now they're just not profitable, but let's say we can get them to a PE ratio of 5. Let's say that we can get them to a PE ratio of 10, and then eventually a PE ratio of 15, and we're going to do the same thing. Price to free cash flow is usually going to end up being around that same number, and then we're going to look for desired annual return. I always make my desired annual return 15% because I need to get a sizable return, or at least assume to get a sizable return, than just putting my money in the S&P 500. So if we hit here and we hit analyze, you are going to see, obviously, based off of my very conservative numbers, because that's all I have to work here. I'm assuming the company's going to be profitable, and it's nowhere near it. But you can see based off of these numbers, we're nowhere near where I want them to be. Looking at the high side of things, if you think they can do on average in the next 10 years 25% revenue growth, if you think they can do 12% profit margins on average year over year, 10 years, if you think free cash flow can be 12%, PE can be trading at 15, price of free cash flow can be 15, and you want a 15% return, $22.59 is where you really want to be buying this at. And to be quite honest, I don't think that that's a bad price at all. But where this company is currently, it's just way too much of a risk for me to invest. I would rather put my money in a company that I don't want to say a value investing trap, but like I'd rather put my money in a company like Meta, or I'd rather put my money in a company even like Amazon or Apple. Like I'd rather just put my money in a company that's profitable, that's doing well, that I feel very confident in for the next 5 years. That's maybe 20, 30, 40% discounted right now because of the current market, as opposed to throwing my money into a company that I really don't know what's going to happen. I like the idea. I really love the company. I love the idea of the company, but things are just too wishy washy right now for me to throw money at it. Guys, let me know what you think. Comment down below. As always, thank you for all the support. It truly means the world to me, and I'll see you guys next time. Peace.